Written by Morgan Freeman. Narration credits. Documentary work. In the world of high finance, some names echo with power. They speak of vision. They speak of immense wealth. Leon Black is one of those names. He is a key figure in the landscape of modern money, a man who saw opportunity where others saw only risk. He co-founded a firm that would grow to define an entire industry. That firm is Apollo Global Management. It stands today as a giant in private equity. This is a field where fortunes are made by buying, reshaping, and selling companies. It is a world of high stakes and even higher rewards. Leon Black did not just play the game, he helped write the rules. His story is a lesson in ambition. It is a tale of how knowledge, timing, and a certain kind of courage can build an empire. Many know him for the vast sums of money. The headlines often focus on the billions. But behind the numbers is a clear strategy. There is a method to the success. This essay will walk through his life. It will follow his career from its early days to the pinnacle of the financial world. We will look at the deals that made him famous. We will examine the principles that guided his decisions. His journey offers a clear view into the heart of modern capitalism. It starts with learning a trade. Leon Black mastered the complex art of corporate finance. He learned how to value a company. He learned how to restructure its debt. He understood that a business in trouble was not always a business that was finished. Sometimes it was an opportunity in disguise. This core idea became the foundation of his career. It was the simple, powerful concept that he and his partners used to build Apollo. They would buy what was broken. They would fix it. And in doing so, they would create enormous value for themselves and their investors. Every great story has a beginning. He came from a family with a background in business. He first attended Dartmouth College. There, he studied philosophy. There, he studied history. He enrolled in Columbia Business School. His education was the first step. After graduating with his MBA, he entered the world of investment banking. He joined a firm called Drexel Burnham Lambert in 1977. In the 1980s, Drexel was the center of the financial universe. The firm was led by the famous financier Michael Milken. It became known for its dominance in the high-yield bond market. These were often called junk bonds. The year was 1990. The financial world was in turmoil. Drexel Burnham Lambert, the powerhouse of the 1980s, had filed for bankruptcy. For many who worked there, it was a moment of crisis. But Leon Black saw it differently. He saw an opportunity. He had the skills. He had the reputation. And he had a clear idea. He gathered two of his trusted colleagues from Drexel. Their names were Josh Harris, Mark Rowan. Together, these three men decided to start their own firm. They named it Apollo Global Management. The name was fitting. Apollo was the Greek god of light and knowledge. They intended to shed light on opportunities others could not see. Their starting capital was modest by Wall Street standards. They began with about $400 million. But their strategy was powerful and precise. They would focus on what they knew best. They would invest in distressed companies. The economic recession of the early 1990s created a perfect environment for this plan. Many companies were struggling. Their bonds and loans were trading for pennies on the dollar. While other investors ran away from this trouble, Apollo ran toward it. They saw these discounted debts not as a sign of failure, but as a low-cost entry point to gain control of entire businesses. The core idea was simple. Buy the debt of a troubled company. Use that ownership of the debt to take control of the company itself. This is often done through a bankruptcy or restructuring process. Once in control, they would get to work. They would bring in new management. They would cut unnecessary costs. They would sell off non-essential parts of the business. They would focus the company on its most profitable operations. The goal was to nurse the company back to financial health. It was a hands-on approach. It required more than just money. It required expertise in management and operations. This model is what we now call private equity. They were not afraid of complexity. A messy bankruptcy or a complicated debt structure was an opportunity for them to apply their specialized skills. Then, the 2008 financial crisis hit. LyondellBasell emerged from bankruptcy as a leaner, stronger company. Apollo's investment turned into a massive profit, reportedly around $10 billion. They led a difficult and lengthy restructuring. They worked to overhaul the company's finances and operations. They moved into credit and real estate, adding pillars to a growing empire and creating steady income beyond buyouts. In 2011, Apollo became a public company. His personal fortune, tied to his ownership in the firm, soared into the billions. The playbook: become an expert, build a strong team, think long-term, and manage risk intelligently. They used leverage to amplify returns, but backed it with exhaustive research and clear improvement plans. Apollo manages money for pensions, endowments, and sovereign wealth funds from across the globe. Great wealth brings responsibility. Careers of this magnitude draw scrutiny and complexity. Learn your craft deeply, build a great team, think for the long term, and understand the risks you take.